On September 19, 2025, the Department of Treasury and the Internal Revenue Service provided some guidance on the no tax on tips provision contained in the One Big Beautiful Bill Act. The One Big Beautiful Bill Act allows a deduction of up to $25,000 in tip income. The tips would still be reported on your tax return and count as earned income. However, eligible taxpayers would be able to claim a deduction of tip income up to $25,000. The proposed regulations list nearly 70 separate occupations of tipped workers, from bartenders to water taxi operators. The nearly 70 separate occupations of tipped workers are grouped into 8 categories of occupations: beverage and food service, entertainment and events, hospitality and guest services, home services, personal services, personal appearance and wellness, recreation and instruction, transportation, and delivery. In order to claim the deduction, a worker must be both in an occupation on the list and receive qualified tips. The proposed regulations provide a definition of qualified and not qualified tips. Generally speaking, qualified tips must be paid in cash or an equivalent medium and must be paid voluntarily by the customer. If not voluntarily given by the customer, it may not be considered a qualified tip. For instance, if a restaurant imposes an automatic service charge for large parties and later distributes that amount to its waiters and staff, if the charge is added to the bill with no option for the customer to disregard it or modify it, the amounts distributed to the workers from it are not qualified tips. If you would like to make a comment on the proposed regulations, you can do so at www.regulations.gov. Comments on the proposed regulations are due by October 23rd, 2025. My name is Vladimir St. Louis, and I am a tax attorney here at St. Louis Law PA, where we focus our practice on helping our clients with tax-related matters. Until next time, have a great day.